So good evening, ladies and gentlemen, and a very warm welcome to this, the 168th AGM of the Ipswich Building Society. And a particularly warm welcome if this is your first time at our AGM. I'm Alan Harris, Chairman of the Society, and I welcome you all. It's been lovely to meet the people I've met already this evening. It's a pleasure to see so many members here. We're just short of 750 this evening, which I think is a record for us, actually. So welcome to all of you. Okay, some introductions now. Alongside me this evening are the Board of Directors and our Company Secretary, Rebecca Newman. And of course, Richard Norrington, our Chief Executive on my left, who will be talking to you in a bit more detail in a moment. We're also joined by Simon Clark from our external auditors, KPMG, who is here in the front row to answer any questions if necessary. And now I just turn to the formal part of this evening, which is the Annual General Meeting itself. It's the annual occasion each year when we meet you, our members, and we present to you the report and accounts, and we ask for your approval for these and for the appointment and reappointment of the directors. We also ask for your approval as well of the remuneration report as well. So I'm going to deal with the AGM formalities and then spend just a few minutes highlighting key aspects of the Society's performance last year. And also find out, of course, if there were any questions from the meeting, but we do have quite a few questions which have been posed in advance, which I'll use as well. I will then ask you to vote on the various resolutions if you haven't already voted. And lots of people have voted online or in the branches already. But on that point, if you haven't already voted, and if you haven't already got a voting form, can you put your hands up now, please, and one of the team will bring one to you. Okay, if I start with the AGM formalities, we have received apologies from 35 members. I don't propose to read out the names, but the list can be inspected after the meeting. The minutes of the Annual General Meeting held on the 29th of March 2017 have been read and signed by the Chairman of that meeting. It's normal for these to be taken as read, but if anybody would like them to be read out, we can arrange that now. Okay, thank you. So just a few reflections on me, first of all, on the performance of the Society for the year ended 30th of November 2017. Last year was a year with significant areas of uncertainty throughout the UK economy. There were lots of changes in the housing market, everything from stamp duty changes and so on. But it was all played out against the changes planned as a result of Brexit as well. But against this sort of backdrop, and with all those uncertainties in there, I'm pleased that despite all those changes and that uncertainty, we've produced some very pleasing results, which if you've studied the financials, you'll have seen. But especially worthy of mention are good growth in both mortgage assets on one side of the balance sheet and the retail savings balances on the other side of the balance sheet. Further strengthening our relationships with our mortgage intermediaries. I'm delighted that some of them are here this evening. And all of that underpinned by a strengthened control framework which has our enterprise risk management at its heart. And I'll just explain a little bit more about some of those key areas now through the key numbers first of all. Mortgage assets increased by £44 million last year and now stand at £521 million at the year end. And the savings balances which support this mortgage growth also grew by £26 million and now stand at £567 million. Last year we saw the first significant move for many years from the Bank of England on interest rates. There may be more to come, of course. There's plenty being speculated on. Commentators are always talking about this at the moment. But for us, we were just pleased to be able to pass the rise on to our savers. And what 2018 holds, well, who knows? We'll just have to wait and see. But we're really pleased with these results as well, in that they're a stark contrast to other banks and building societies with their continuing programme of closures. They're closing branches and offices hand over fist, but we at the Ipswich are not doing that. We continue to see our branches as an integral part of our customer proposition and our position in our communities. Richard will explain a little bit more about that in a moment. Our mortgage business is supported superbly by the intermediaries we work with. Our online portal has helped us to build this further during the year, and our business with at least 41 of them now, 41 of our key intermediaries, have introduced over £1 million each to the business, and we thank them most sincerely for that level of support. Our sector coverage grew also with the group sometimes known as the mortgage misfits. It's a coin we phrased a few years ago. Superbly serviced, I have to say, by our underwriting and support teams. But underpinning these results are two key factors. One is our administration costs, where we continue to invest in the business, and the other one is our credit performance. Now, our investments, first of all, especially online, but also in IT, have been significant, and as such, our expenses have now grown to £8.9 million. But we now have an infrastructure which is capable of supporting much higher levels of business, and our plans are now to carefully grow in all of our key business lines, but particularly in our mortgage lines. So what we want to do as a result of that investment and that impetus is to create real returns for our members from the investments that we've made. On the credit performance side of things, mortgage arrears are a critical area for any building society, and we are no different. If we write our business carefully with our very individual approach to customers, then the results should be positive, and so it proved last year. I can report that the number of mortgages in arrears over 12 months was again only 5 cases, totaling £60,000. In addition, we had only 85 cases which were subject to what's known as forbearance. This is where we've made some changes to the payment schedule to accommodate some difficulty that the borrower faces. So as well as the underwriting team's expertise with new business, this result is very much due to the splendid work done by our arrears team. They really have done a terrific job. They work closely with any borrower facing difficult times, and we do take a sympathetic and very positive approach and agree sensible and affordable payment plans with those sort of borrowers. If we roll all of those factors together, we're pleased to report a profit before tax for the financial year of £3.1 million. This allows us to maintain our investments in products and service and to build our capital ratios, something which is very much top of the regulatory agenda. Our regulatory capital increased in the year to £34 million. We will continue to manage our funds carefully and prudently on behalf of you, our members. I can assure you of that. Can I move on to the subject of governance? This is also quite rightly high on the regulatory agenda. And our job at the Ipswich is to maintain high standards of governance, not just for regulatory reasons, but because you, our members, have a right to expect it. During the year, we said goodbye to 2 long-serving directors. Firstly, my predecessor as chairman, Sarah Evans, and also Kieran Blackburn, our finance director. Sarah had completed 3 three-year terms as director in November, and during that time led the society, first of all as chairman of audit, and then as chair of the board itself. She led through substantial transformation of the society into a way that it is structured and staffed in such a way that I think it's genuinely fit for purpose in this modern, quite difficult world that we're in. We're a modern mutual operating to the highest standards, but in business for the benefit of its members and its communities. So I thank Sarah Evans very much for all she did for the society. Kieran was a director since 2008 and helped navigate the society through very turbulent times. If you think back to the 2008 crash and the aftermath of Northern Rock and RBS, Kieran was there through all of that period. He contributed massively to the development of the society, and we do thank him most sincerely also for his contribution. I'm delighted to welcome his successor as Finance Director, Trevor Slater, here to his first AGM tonight. Finally, our newest recruit to the board is Steve Liddle. Steve lives locally in Woodbridge, and as well as a valued local perspective, he brings significant expertise to the board as a former partner of KPMG and through his current role as a partner of the accountants Mazars. I think that's enough from me. I do commend the report and accounts to you. Before asking you to vote on our various resolutions, though, I would like to just check if there's any questions from the floor. If anybody does want to ask a question, can you please put your hand up and we'll get a microphone to you with such a lot of people here. You've got a chance to do that. In the meantime, we've had 12 questions in writing. The majority of them, apart from the 2 late ones, are posted on some boards at the back of the room. We'll also be posting them in detail and with all the answers that we've given to each question. We take these most seriously to all of the members. They'll all be posted online tomorrow. I will pick up on the themes of some of them, though. The questions cover all sorts of areas, as you would expect from our members, everything from governance to equality, to diversity and remuneration, interest rates, customer service, the use of KPMG as our auditors, and the location and relocation of our Ipswich branch office. So it's a right mixed bag, that. All of the questions, though, as I said, we've answered in detail, and we'll post all of that detail online. But I thought I just should pick up on some of the themes from those questions. 3 questions have been received in regard to remuneration, and detailed replies from Peter Alcock, who is chair of the Remuneration Committee, have been sent. Essentially, looking at the replies that went, Peter was able to explain the nature of the process that is followed in benchmarking the CEOs and the executive team's salaries, and also how the annual performance-related bonus scheme works. We've also had a few members ask why we've moved from our Sailmakers location, which used to be known as Tower Ramparts here in Ipswich, and we've moved, of course, to Mutual House, to a great fanfare locally. The Society has been Sailmakers, as it was known, for 30 years, almost 30 years. And in recent years, we have been searching for larger premises, which would offer a more convenient and comfortable experience for members. And that new branch, Mutual House, we think does that. It's right in the centre of Ipswich, a few steps from Cornhill, and convenient for the butter market. So we think it gives everything that we need, even though it's not quite as close to the bus stop and so on as the old branch was. But it does really change our footprint in the middle of Ipswich, and we don't have to pay a landlord for rent and so on. It's our own building. Another important question that's been raised in advance is from a member who I think is in the audience tonight. I'm not totally sure, but it relates to the interest rate on our ISAs, and it's a particular issue in the current low interest rate environment that we're all trading in. And it relates in particular to maturing regular ISAs. The question is all about our options and priorities and communications on maturity, and whether we value membership, which we do, I can assure you, and whether we give value for money to maturing ISAs. Well, what we try to do is offer a really good follow-on offer to any maturing ISAs. And this particular case was all about a fixed rate maturing ISA, and what happens after maturity is reached. The product was at 2% fixed, and it was maturing this year. It had a default rate, which you have to build into the construction of an ISA, of 0.45%. But what we did was we encouraged the savers to move across either to a refix at either 1% or 1.8% for 2 years. So that's what we did. Now, the members asked all about that and the rationale behind it, and that's in a more detailed answer. But what I can say is we work really hard on keeping our maturity communication simple and straightforward. We tried to make switching as easy as possible. We might not have got that right, and we might be able to get it better, but we'll work on it. And we just try to be fair and straightforward with that process. The last question I'll just pick up is a late question in today, which I thought was very interesting. It's about equal pay, which is a very topical subject at the moment for male and female employees, especially those doing the same jobs. Now, the Society annually reviews the salary of all its employees and does this matching and looks at all of these comparisons. We always have it under review, and part of that process, helped by HR, is to ensure that we don't have any gender pay issues. In addition, the Society has recently decided to subscribe to the Women in Finance Charter as well, so you'll see that feeding through our documentation and our accounts disclosures. So that was those questions and the themes that were posted online. Wonder if there's anybody else got any questions tonight? Otherwise, we'll move on to resolutions. Okay, thank you very much. So the resolutions of the formal AGM. Item 1 is to receive the report of the directors, the annual accounts and the auditor's report. I therefore propose that the director's report, the annual accounts and the auditor's report are received. Item 2 is to approve the director's remuneration report. Now, this is included at page 22 of the annual report and was also included in the review of the year, which was sent to you with the notice of the AGM. The report sets out our approach to remuneration of our executive and non-executive directors, and there have been no substantive changes to our approach this year. Non-executive directors receive a basic fee with a supplementary payment for roles such as Chairman of Risk and Compliance and for Chair of Audit. Executive directors receive a basic salary which is reviewed on an annual basis and can also benefit as well from a performance-related pay scheme if set targets are met. Now, we aren't required to seek your approval for the Director's Remuneration Report, but we think that it's in the interest of good governance that we do so. So I propose that the Director's Remuneration Report is approved, and I wonder if I could have a seconder from the meeting, please. Thank you very much. Item 3 is to reappoint KPMG LLP as auditor. An annual requirement for this meeting is for you to consider, and if thought fit, to pass an ordinary resolution to reappoint KPMG LLP as auditors. I therefore propose that the Society reappoints KPMG LLP as auditor. Could I please have a seconder for that as well, please? Thank you very much. Item 4 is to elect and re-elect the Society's directors. Our rules require that not less than 1/3 of our directors should retire each year, and if they have the support of the board, can offer themselves for re-election. I therefore propose that Stephen Liddle is elected and that Peter Elcock and Michelle Tennans be re-elected. Could I please have a seconder for that? Thank you very much. Okay, ladies and gentlemen, if you have not voted already, could I ask that you cast your votes now, please, on the papers provided, and pass these to a member of the team. These will be added to the numbers that we have online and from the branches. Thank you very much, everyone, and thank you for everybody who voted in different ways. While the votes are being counted, I'm now going to turn to our main award in the Ipswich Building Society, and it's the David Coe Award. The annual David Coe Award is presented to members of staff who constantly and consistently provide excellent customer care and a focus that exceeds the normal requirements of their job. Nominations are made by Society employees, and the award can be given to head office and branch staff alike. We received, I have to say, some brilliant nominations this year, but after much consideration, I'm pleased to announce our winner. This individual joined the Society on an apprenticeship in February 2016 and instantly impressed with how they dealt with customers. Their prompt and professional approach and can-do attitude ensures that branches can deal with members' queries as quickly as possible, and he's often the go-to person for branch colleagues to contact for assistance. This individual's friendly and positive nature has not gone unnoticed. He regularly receives compliments and thanks from colleagues who describe him as, and I quote, extremely helpful and approachable at all times, and also someone who, and I quote again, consistently looks to provide an excellent level of service. This individual is also very self-motivated and keen to develop his knowledge, currently studying for level 4 of the AAT accounting qualification, and all being well, he should be qualified in a few months' time. He's also taken part in delivering money management, financial education sessions at Her Majesty's Prison Hollesley Bay, and helped to raise money for St Elizabeth Hospice as well, and he took part in their Ride Fest event. So he's quite a winner. The Board of Directors would like to thank you for your hard work and dedication, a fantastic commitment to providing excellent customer service. Ladies and gentlemen, the winner of the 2017 David Coe Award is the finance specialist in our finance team, Noah Davis. Can you please congratulate him?
Well done, Noah. That was fantastic. Oh, extra applause. Good evening, everyone. I'm Richard Norrington, and I'm the Chief Executive of the Ipswich Building Society. And may I just say how delightful it is to see all of you here tonight. And firstly, I'd like to thank Alan and congratulate him on his new role as our chairman, and of course to send my thanks to Sarah Evans, who was our former chairman, for her hard work and dedication to the Society for the past 9 years. So the 12 months in which this AGM relates were also my first 12 months at the helm of the Society. And I'm pleased to say that we have grown our mortgage assets, we've increased retail savings, and we've also increased our profit before tax, which, as retained earnings, help strengthen the capital base of the society for our members. We've also maintained a high level of member satisfaction. And I'd now like to take this opportunity to take you back on a journey with me over my first 12 months. So it seems like quite a while ago now, 1st of December 2016. However, it was a time of some economic unrest, although when hasn't there been some economic unrest over the recent years? And during the year, we did, of course, see the Bank of England increase base rate and reversing the cut of August 2016. I know that many of you in the room will most likely be savers, and this would have come as welcome news after a long period and historic period of low rates. And on the other side of the book, we've got our mortgage members to consider as well. But in the autumn budget, there was good news for first-time buyers, with the abolition of stamp duty for the first £300,000 of house purchases. And of course, the base rate is still subject to some speculation, recently fueled by the Monetary Policy Committee stating that interest rates are likely to rise sooner than previously thought. And that makes for a frustrating time for people looking to purchase or remortgage a property who may wish they had a crystal ball, or for savers looking for a home for their funds. The question of whether to go with a fixed or a discount rate in both scenarios, of course, rumbles on. Closer to home, during the year, we well and truly bucked the trend with our branches, having heard announcements of 22 closures. That's 22 bank and building society branches closing in Suffolk alone in recent months. Conversely, we invested in our branch network. And during 2017, there was a lot of work going on behind the scenes to develop new and improved premises. And this year in January, we moved into Mutual House in Ipswich town centre, and last month into a new branch in Woodbridge. And both of these branches give us a new, vibrant space in traditional settings from which we will continue to offer a great service and a valued service to our members. If you haven't visited our new branches and are in the area, we'd love for you to come and see what we've achieved for your benefit. And on the mortgage side, you may well be aware of our proposition. We have skilled underwriters based at our Ipswich head office who are experts at assessing the various circumstances that life can bring. We focus on people who really need that individual attention, and this means that we can take a realistic view of assessing risk for properties up to 95% loan to value. And we lend to self-employed, to older borrowers, for self-build, for buy-to-let, for shared ownership, and more. And during 2017, we extended support to workers on 0-hour contracts, which are becoming increasingly the norm in the hospitality, retail, and social work sectors. We think that if these workers have a consistent employment history over the past 18 months, why shouldn't they have similar opportunities to someone in salaried employment? We are really pleased to be able to extend what is known as our Mortgage Misfits offering, people who may not be able to access the mainstream mortgage market with the larger, commonly automated lenders. Our mortgages continue to be available to direct applicants through our own mortgage consultants and through a network of mortgage intermediaries. Whichever route our members choose, we remain committed to offering straightforward products and fairness. Our all-in member event programme is proving ever popular as we reach record numbers again tonight for this, our flagship event. It really is a great achievement to have so many here, and in fact, the envy of the building society sector. Thank you for turning out, although I know you are not just here to see me. Thank you, Adam. Alongside our ever-popular member events, we have 5 exclusive member discounts, which represent another benefit to membership. I'd just like quickly to mention those. Firstly, members with an eye on the property market can access 20% off standard rates and letting fees with Nicholas Estates. And we've teamed up with Suffolk Food Hall to offer Member Mondays, giving 10% off restaurant and retail purchases. We also have offers with Fred Olsen Travel and Fred Olsen Cruise Lines. And finally, 15% off in the spring and autumn tours at the new Wolsey Theatres. A comprehensive selection, I'm sure you'll agree. Alongside rewarding membership, one of the things which is close to our hearts is being a responsible business. We believe every organisation should invest and give back to the community in which it operates. We've had many highlights during the year, such as our ongoing financial education programme, and we have spent 700 hours in schools, colleges and prisons during the year. I was pleased to be involved myself with a session at Her Majesty's Prison, Hoasley Bay, and experienced firsthand what it meant to those on our money management programme. Other activity I've been involved with myself during the year was our employee volunteering pledge, which has seen the Society give 1,000 hours into the local community. Alongside the Society's executive team, I visited Active Lives Community Garden, and we spent some time really getting our hands dirty, which was quite different from the day job, as I'm sure you can imagine. And we've also had secondary school Year 10 work experience placements to help deliver career skills sessions for those in education and take on undergraduates on internships and work placements during the summer holiday. Employee training has been an important focus for us, with 9 employees undertaking a bespoke sign language course, and also 5 who are Dementia Friend champions. I'm pleased to say that all of our branches are signed up to the Alzheimer's Society's Dementia Friends scheme, so we are very much working to be a fully inclusive and supportive presence on the High Street. Looking ahead, what is there to come? Our corporate plan has been agreed by the board, which will enable us to deliver consistent strategy over the next 3 years. One thing which I know has been said many times before is the ability to access savings accounts online. What we want to do is to balance this with our commitment to face-to-face service and ensure online access is complementary to and not a replacement of our branch proposition. I'm delighted to say that we have been busy researching our online offering and we have appointed our preferred supplier. We've also spent a lot of time, as Alan referred to, investing in our risk framework to ensure that we are robust for the future and in the best possible place for the years ahead. We have strengthened our executive team with the appointment of Mark Nash to General Manager, Risk and Compliance, alongside Trevor Slater, who joined us from January of this year as Finance Director. And I'm also pleased to welcome 3 other new senior management team appointments. We operate in a regulated sector, and our board are making sure that we have a robust, sustainable business and are fully equipped for whatever challenges may come in the future. One significant regulatory change to come in May, which you may well have heard of, is the General Data Protection Regulation, known colloquially as GDPR. I would like to issue a plea to you to say that we would love to keep in touch, but we do need your permission again to enable us to do this. If you receive our emails at the moment, we want to keep sending these to you, which will include details of our member events, such as this evening, but we do, of course, promise not to bombard you. If you haven't already completed a consent form, which was included in your voting pack, please do take the time to fill one out before you leave or visit a branch.
Ladies and gentlemen, the results. Resolution 1, to receive the report of the Directors' annual accounts and Auditors' report. In favour, 3,447, against 41. To approve the Directors' remuneration report, those in favour, 3,163, and those against, 272. To reappoint KPMG as auditors, those in favour, 3,308, and those against, 157. The election of directors. To elect Stephen Liddle, those in favour, 3,329, those against, 114. To re-elect Peter Elcock, 3,330, those against, 129. And finally, to re-elect Michelle Tennons, 3,343, those against, 117. I want to hand back to Alan to conclude the evening.
Thank you, Rebecca, and thanks very much for hanging on, everyone, there. And there's more to follow. I can now close the AGM with these words. I declare KPMG LLP duly reappointed as the Society's auditor. I declare Stephen Liddle duly elected as a director, and Peter Elcock and Michelle Tennons duly re-elected as directors. And all of these results will be online on the website from tomorrow. So, thank you very much, ladies and gentlemen, for your attendance and for your attention. I can now formally close this annual general meeting.